Hello friends, Bcom semester 3, economics chapter number 2. So guys, today we are going to start your new chapter, that is national income. We already have finished your first chapter and I have uploaded the videos on the YouTube so that you can go to my channel and watch the videos of the first chapter. Today we are going to start your new chapter, that is national income, and based on the term itself, say it is a kind of income. And if we go for the national income, then let's say for the income of a whole country. So guys, what is national income? Why we need to measure the national income of the country? What are its importance? What are the methods of measuring the national income? And all these things are will be discussed by me in this chapter. So guys, let's start with the introduction, that what is national income. So in the introduction, there is written that national income is an uncertain term which is used interchangeably with national dividend, national output, and national expenditure. On this basis, national income has been defined in a number of ways. Now we have a basic definition of national income, that is, national income means the total value of goods and services produced annually in a country. So guys, national income means the total value of goods and services produced in a country, and there must be a time of 1 year. So the monetary value of total goods and services produced in a country in a year is called national income. And guys, we have other definition also. So in other words, the total amount of income occurring to a country from economic activities in a year time is known as national income. So again, we have the same message, that during a period of 1 year, the total income occurred by an economic activity is considered as a national income. Now it includes payment made to all resources in the form of wages, interest, rent, and profits. So guys, no matter whatever the form of the payment, or no matter whatever the form of income is, but it is a total monetary form of the produce goods and services in a country is considered as a national income. Now we will move further to the definition. According to Marshall, what does the Marshall say that about the national income? Then the labor and the capital of a country acting on its natural resources produce annually a certain net aggregate of commodities, material, immaterial, including services of all kinds. This is the true net annual income or revenue of the country, or a national dividend. So, guys, Marshall says that it is a all commodities, whether it is a material or non-material, means whether it is a goods or a services, all the material and non-material commodity was produced by using some of the resources, or by using the natural resources available in a country, is considered as a national income. So this is what the Marshall said about the national income. The definition as laid down by Marshall is being criticized on the following ground. And whatever the definition has been given by the Marshall about national income, it is criticized by some of the economists for the following reasons. So guys, due to the varied category of goods and services, a correct estimation is very difficult. We cannot estimate a proper value of different kind of commodities in the markets, because there are different kind of commodities, there are many different kind of commodities in the market. So it is very difficult to estimate a proper value of each and every commodity in the market. Now the second thing is, there is a chance of double counting, hence national income cannot be estimated correctly. And guys, there is also a chance of double counting for the same production. How can we say that? There is an example that a product runs in the supply from a producer to distributor to wholesaler to retailer, and then to ultimate consumer. If on every movement commodity is taken into consideration, then the value of national income increases. So guys, for the same production that has been produced by the producer, it will be gone from the producer to the distributor, then to wholesaler, then to retailer, and after that it will be reached to the ultimate consumer. So in this whole process, if we if we count each and every activity, each and every moment of the same production as a national income, then it will be uh, we will get increased national income, which will be actually the reality of the national income will be quite less, but we have considered the same production multiple times, and that's why we will get increased national income. So it might be possible that there will be the possibility of double counting of the national income in the definition which is given by the Marshall. And after that we have other thing that also the one other reason is that there are products which are produced but not marketed. So guys, there are some products which are not marketed, which are not ready to sell, which have been stored in some of the godowns and are not ready to sell. Then if they are considered in the calculation of the national income, then it will be again create a problem. For example, in an agriculture oriented country like India, there are commodities which though produced but are kept for self consumption or exchange with other commodities. Thus there can be underestimation of national income. So guys, there are some of the consumption, some of the products which are not for the sale, but if a farmer keeps some of the production from his farm are for his self consumption, so this will be not considered in the national income. If whatever the production farmer get from his farm is not he has not brought that production into the market, then this will be not considered in the national income. So in this kind of scenario, it may be possible that national income may be underestimated. So, whatever the definition Marshall has given about the national income has some of the criticism about this definition. Now we will move further. Simon Kuntz defined national income as the net output of commodities and services flowing during the year from the country's productive system in the hand of the ultimate consumer. So, in this definition, we also gives the same idea. We also gets the same idea that the net output of commodities and services means the whatever the commodities and services has been produced in our country flowing during the year from country's productive system. So whatever the country's productive system is, whatever the commodities and services are produced from the country's productive system during the year, it will be in the hand of the ultimate consumers, and all these production will go on to the will go to the consumer's hand. So whatever the value of commodities and services produced in a year in a country is considered as a national income. That is what the Siemens says. Now guys, we have get the clear idea about the national income, that national income is an income that is, we can say that, okay, in a period of 1 year, the total monetary value of goods and services produced in a country. Again, I will say national income means in a period of 1 year, the total monetary value of goods and services produced in a country is known as, or we can say, that is the national income. Now, guys, we will move further. After all this definition given by some of the economists like Marshall and Siemens, we will see that importance of measuring national income. Means why should we measure the national income? Why should any country measure its national income? What is its importance? What can we know from measuring the national income? So there are certain points, guys. We will see it one by one. The first is the measurement of the size of the economy and level of country's economic performance. To know about the country's economic performance, and also we can know about the size of the economy of the country, and for this purpose we need to measure our national income, and we can also know about the growth, that whether we have grown our economy from previous year or not. So to know about the performance of the economy, we need to measure the national income. Second thing is to trace the trend or the speed of economic growth in relation to previous year also in other countries. The second important thing, that why we need to measure the national income. So each and every country measure their national income so that they can know about the speed of their economic growth, that at what speed we are growing our economy, and also we can compare our economic condition with other countries, so that we can also know that how much we are ahead of other countries or how much we are suffering, or we can say that we are uh, below of other countries in the economic growth. So, for to know about the speed of economic growth, we need to measure the national income. The third point that is we have on the screen is to know the composition and structure of the national income in terms of various sector and periodical variation in them. Guys, this is also a very important point, that we can know that from which sector we get the major part of the biggest part of the national income. That is, we our economy has been classified in three different sectors, that is primary sector, secondary sector, and service sector. So what is there in the primary sector? Primary sector means whatever the income we are getting from the agriculture, uh, from fisher work, from jungle and forest work. So all these things are considered in the primary sector. Now the secondary sector is the sector which we can say that industrial sector. So there are three different sectors. The first one is primary sector, which is based on the agriculture basis. The secondary sector is on the basis of industrial sector, and the third one is service sector. So at present, India has the biggest, or we can say that service sector contributes the highest part in the national income. So from the measurement of national income, each and every country can know about the contribution of the national income from different sector, that which sector contribute the national income most and which sectors are still need to be developed. So by measuring the national income, each and every country know about the contribution of the different sectors. Now the fourth point is to make projection about the future development trend of the economy. By measuring the national income, we can plan for our future, or we can plan for the next year, that in the next year how will the economy work, what decision we will take based on the current situation, and uh, how can we improve the way our economy is going developed. The fifth point is to help government formulate suitable development plans and policies to increase growth rates. So guys, this is the same point as I have discussed in the fourth point, that government can formulate the suitable development plans by knowing that how the growth of our economy is going on. So based on the current situation, we can plan for our next year or the upcoming years, that how can we improve the rate of growth in the upcoming years. The third point is to fix various development targets for different sector of the economy on the basis of the earlier performance. And based on this, we get to know that which sector contribute the national income more, and which are the sectors that need to be developed in a upcoming year, so that government can focus on a particular sector for which it can get more growth rate, it can get more contribution from a particular sector. Now guys, the next point is to help business to forecast future demand for their products. Based on the national income, we can know that which product has the highest demand in the country, and which product has least demand in the country, and based on that, each and every businesses can know that to which product they need to give the importance, and what products to be produced in the next upcoming years. The next point is to make international comparison of people's standard living standard, and by measurement of the national income, we can get to know about the per capita income also, because the national when we divide the national income by the number of people in the country, we will get the per capita income. And by getting the per capita income, we get to know about the standard of living of the people. If the per capita income of any country is high, we can say that the standard of living of that people or the citizen of that country are quite good, or we can say the high. So based on that, we can also compare the people's standard of living with other countries by comparing the per capita income of the country. So guys, these are the importance, that why we measure, why each and every country measure the national income every year, so that it can know many crucial things, and it can also plan for the upcoming years, that in the upcoming years how it will plan to grow its economy in a better way. We will move further that there are three different methods of measuring national income. The first one is product method, the other one is income method, and the third one is expenditure method. So to measure the national income, there are three different methods. The first one is product method. Guys, we will see in it that in a product method, in this method, national income is measured as the flow of goods and services. We calculate money value of all final goods and services produced in economy during a year. As we already know that it is a value of all the final goods and services produced in a country during the year. It's known as a national income. So in a product method, it is also the same. Final goods here refers to those goods which are directly consumed and not used in further production process. But one thing that we need to keep in our mind, that final goods means the goods which can be used directly. It can be said that it is a consumable goods, because the goods which are not properly produced, or we can consider those goods as a raw material, cannot be considered in the product method for the calculation of national income. Goods which are further used in production process are called intermediate goods, and we cannot consider intermediate goods in the calculation of national income. So guys, we also need to focus on this point. In the value of final goods, the value of intermediate good is already included. Therefore, we do not count the value of intermediate goods in national income. Otherwise, there will be double counting of value of goods. So we will not consider the intermediate goods in the national income, because we already have considered it whenever it has been produced. And guys, also we will read further in this point, that to avoid the problem of double counting, we can use the value addition method, in which not the whole value of the commodity but the value addition, the value of final good, value of intermediate good at each stage of production is calculated, and these are summed up to arrive at GDP. GDP means gross domestic product. So guys, to avoid the double calculation, we will not consider intermediate goods, and instead of this we will consider only the final and finished good, uh, the value of finished good in a national income. The money value is calculated at market price, so sum total is the GDP at market price. GDP at market price can be converted into by methods discussed earlier, and we will consider all these GDP at a market price converted in any method that we discussed. After that, there are two other methods of measuring the national income. The other is income method, and the third one is expenditure method. But before starting those, I will again explain you this point, that guys, product method is a method in which we will focus on the value of produced goods and services, but also we will keep in mind that there must be a finished good. If the good is not completely produced, it is not ready for the use, then we will not consider those goods in a national income. Otherwise, it will be create a problem of double counting. So guys, in a product method, we will only focus on the goods which are totally produced and are ready to use. Now we will see the second method of measuring national income is income method. Under this method, national income is measured as the flow of factor income. There are generally four factors of production: labor, capital, land, and entrepreneurship. These are the four factors of production. We can also say these are the four elements of the production. Labor gets wages and salaries, capital get interest, land gets rent, and entrepreneurs get profit. Entrepreneurs, we can say businessmen. So in the income method, we will consider only the income that has been got by a particular factor of the production. That whosoever the labor is, when the labor works in any factory, they will get they will get the salaries or the wage. If we see about the capital, then if we have invested our capital somewhere, we will get interest on it. If we talk about the land, that whatever our land is, we will get rent on it. And whosoever the businessman will the profit by selling his product in the market. So in the income method, we will consider the income that has been earned by the different people by the different thing. So when we do the sum of all this income in the country we will get the national income. So in the in the income method we will focus on the income that has been got by the different person by the different factors of the production, that is labor, capital, land and entrepreneurship. Beside, there are some self-employed person who employs their own labor and capital, such as doctor, advocate, CA, etc. Their income is called mixed income. The sum of total of these factors income is called NDP, at factor cost. So guys, we will consider this kind of income. We will not focus on the production, but we will focus on the income that has been got by the people of the country, will be considered as a national income in the income method. Now guys, we will see the third method of measuring national income, that is expenditure method. In the expenditure method, we will see that the expenditure method is the system for calculating gross domestic product that combines the consumption, investment, government spending, and net exports. So, in the expenditure method, we need to focus on these 4 points. The first one is consumption. Consumption means what? Whatever the goods and services are produced in a market, we consume them, we use them. So that how much amount, how much value of the goods are consumed in a year in a particular country. So, for example, there are total production of goods and services is, for example, 1 crore, but the consumption of the goods and services is 80 lakh rupees. So we can consider only this amount of goods and services who which is totally consumed by the people in the country. So the consumption, investment is also considered in the expenditure method, that how much investment has been done in a year. Government spending, government spend on different kind of services, that is transportation service, communication service, and we can say basic and primary services. Government spend money on securities. So means there are various things in a country on which government spend its money. And also net export, whatever the export we have done in a year will be considered in the expenditure method. So these 4 points will be considered in an expenditure method to calculate the national income of the country. So guys, it is the most common way to estimate GDP. It says everything that private sector, including the consumer and private firms and government spend within the borders of a particular country, must be added to the total value of all finished goods and services produced over a certain period of time. This method produces nominal GDP, which must then be adjusted for inflation to result in the real GDP. So guys, we need to focus on the consumption, investment, government spending, and net export in a country. So all these 4 points will be considered for the national income in the expenditure method. Now, if we talk about the private companies, then whatever the production private companies does and whatever the sale they have been made in a year, whatever the export has been done in a year from each from a particular country, or whatever the expenses that has been done by the government will be considered in an expenditure method to calculate the national income of a particular country. And now we will see the net national product. This is also a very important point of your chapter, that is net national product. We will talk about the net national product. Net national product is a term that is often used to represent the difference between gross national product and depreciation. Guys, we have GDP. What is GDP? GDP means the value of GDP means the value of total goods and services produced in the period of 1 year in a country is known as the GDP, gross domestic product. I will again say the total goods and services means the value of total goods and services produced in a country in a year is considered as a GDP. But when we deduct the depreciation, when we minus, we can say when we subtract the depreciation from the GDP, we will get net national product. So being a student of commerce, you must know that when we minus some of the expenses from the gross income, we will get net income. So based on that concept, whatever the production has been done, whatever the production has been done in a year in a country, when we will subtract, when we will minus the depreciation of the different resources that has been used by a particular company to produce the goods or the services. So whenever we minus or whenever we subtract that depreciation from the total value of goods and services, we will get net national product. So guys, I will again say that whatever the total value of goods and services is, when we subtract the depreciation from the total value of goods and services in a country, we will get net national product. And we also have the method of calculate the net national product. So we will also see this, but we will read from the beginning. Net national product is a term that is often used to represent the difference between gross national product and depreciation. In numeric term, the net national product is the total market value of goods and services produced by a nation during a specific period, that is we can say year, with depreciation subtracted from it. So guys, I will again say that the value of total goods and services produced in a year, when we subtract the depreciation from the total value of goods and services produced, we will get net national product. And we also have how to calculate the net national product. Net national product is generally represented by a simplistic formula illustrated below. Net national product is equal to gross national product minus depreciation. So whenever we subtract the depreciation from gross national product, we will get net national product. So guys, you can clearly understand that whatever the value of total goods and services produced in a year, when we subtract the depreciation from the gross national product, or we can say the value of goods and services produced, we will get net national product. So this concept is very easy to understand. We also have discussed three methods of measuring national income. The one is product method, the second is income method, and the third is expenditure method. We also have seen in this lecture that what are the importance of measuring national income. Means why should we count, or we can say why should we measure the national income, or why should any country measure the national income. So these are the points for which reason or for these purposes each and every country needs to measure the national income. And we also have seen the definition and the basic introduction of national income. I will again say guys, national income means the total value of goods and services produced. The total value of goods and services produced in a year in a specific country is known as national income. So guys, that's it for today. In the national income, I will come with the new lecture of the next part of this chapter very soon, and I will upload the video on the YouTube on my channel. So guys, go to my channel, subscribe it, so that you will get the regular updates of the lectures, and revise this lecture, watch this video for 2-3 times at least, so that you can get some idea about national income. And still, if you are left with any query or the question, you can contact me by any means you can do. Thank you guys.